We are good to go here. Let's get rid of that. Let's get rid of this banner. We are live on Facebook, LinkedIn, YouTube, X, Instagram. Looks like we're good to go. Let's put the comments on. Music on pause. How is everybody this morning? Welcome. Let me find my notes here. Welcome, October 15th, 2024, episode 288. Mornings with Scott, the best damn business show for medium and small businesses on the planet. I was laughing as I was signing in here. I was listening to somebody else and their morning podcast talking about Jordan Peterson. And if you're a Canadian, you like to follow along. Jordan Peterson, a proud Torontonian, and also grew up north of Grand Prairie, I think, of Alberta, in a small little town. Anyways, if you missed the backstory, and I covered this on the podcast before we were doing live streams, when he first got in trouble with the College of Psychologists of Ontario for his social media posts. This well-known guy, probably the world's best user of media to build his brand and deliver what he considers to be value. And so he gets in trouble for a post. It's a regulatory body because he is a registered psychologist. And I said on the podcast, whatever that was, it feels like a year ago, that the College of Psychologists would win this because they have the right to do whatever they want to do with their members. Just like I'm a CPA, a chartered professional accountant in Canada, and they have the right to set a code of conduct. And you may not like it. It's not a free speech issue. It is a managing a profession issue. And so I said he was challenging that. I said he was going to lose. He lost. He went through all the courts, and he lost that. So what he has to do is social media training. So that's not the funny part. The funny part is he's decided to go forward with the social media training. And guess how many Canadians have volunteered themselves and their career and their reputation to train the world's number one social media user? How many Canadians have stepped up and said, yes, I would like to train Jordan Peterson? Well, if you really think about it, I think the answer is pretty obvious. It's zero. They can't find anybody who's willing to train this guy because they know they're just going to be schooled by him. So predictable. Happy Thanksgiving. I hope everybody had a great long weekend. To our Canadian listeners, it was Canadian Thanksgiving, including for me, so I was off yesterday. Happy Columbus Day to our U.S. listeners. I hope you had a great Columbus Day and celebrated that. Did you see the story on the weekend that there was DNA testing on Columbus relatives, and it turns out they believe he was a Sephardic Jew of Jewish origin. Apparently in Spain, which is where Columbus comes from, they used to hide in his day their Jewish lineage for obvious reasons, but his DNA shows that he was a Sephardic Jew, and so that was interesting on the weekend. And in completely unrelated news, that Kamala Harris came out against Columbus. Coincidence? Yeah, it's got to be a coincidence, right? Speaking of Kamala Harris, inspirational quote. I would like to just, speaking of faith, an inspirational quote from our next presidential leader, Kamala Harris. Quote, because what we see is so hard to see that we lose faith or a vision of those things we cannot see but must know. End quote. She's awesome. Again, speaking of Kamala, Scott Adams yesterday had an interesting explanation of polling. I really enjoyed this. Scott Adams is a daily podcaster, an author. He does a daily live stream, which is very influential, certainly in conservative circles. But he doesn't. It's not about conservatism. It's not even about politics, although that's what he covers. He's got something he's trying to teach you, much like this show. So he uses politics as a backdrop to that. And what he's trying to teach you is persuasion, how to persuade. And I just find it an invaluable invaluable podcast to listen to for me. It gives me a lot of tips and tricks and ways to think about things. And he raised something yesterday that really got my attention because he's 100% right. And I never thought of it before about political polling in this presidential year. And here's what he says: to raise money, for Donald Trump to raise money, for Kamala Harris to raise money, the polls have to be close, right? If you're a rich donor and you want to donate to a political party, you want your donation to make a difference. Why would you write that $20 million check or whatever the number is to some political party or presidential candidate and not have impact? It'd just be a waste of your money. If you think your person's way behind in the polls, would you write them a check and never have any influence? If you think your preferred candidate is way ahead of the polls, is going to win with or without you, does your money make any difference? Will you have any influence? Well, the obvious answer to that is no. So if do you think Kamala, if the polls were not so tight since July when Kamala Harris entered the presidential race, do you think she would have raised $1 billion in the last couple of months? $1 billion she raised, just her, not the super PACs, $1 billion if she was getting trounced in the polls from July. Do you think she would have raised that money if she was getting trounced in the polls? Or do you think that the polling being so tight has helped her raise that money? Second point. Who does the polls, or the ones that we hear about in the news? Well, the polls are associated. They have media ties, right? You've heard about it: the NBC poll, the ABC poll, the CBS polls, CNN, Fox, New York Times, so on and so on. They all have their polls, and they're all super tight with a small advantage to Kamala Harris. Well, where is that $1 billion that she raised going to be spent? And same for Trump. Where is all the money that he raised going to be spent? It's spent to a large degree on advertising on the same media: NBC, ABC, CBS, CNN. They get all the money from the ads that are being raised, that can be raised. The cash can be raised because of the tight polls. 2024 U.S. presidential election is on track to break records for political ad spending. It's projected that they're going to spend approximately $10.7 billion on political advertising throughout the election cycle. That would be the two candidates, the super PACs, everybody else on the ticket that's spending money. I've been in, if you listen to the show, many of you will know that I've been in Michigan dealing with family matters, and it amazes me when I get up in the hotel there and go down grab some coffee, and they have the TV on. It's just nonstop political ads on whatever station they're playing. It doesn't matter. It's just nonstop political ads. And so they're going to spend this $10+ billion on advertising during the election cycle. Well, 75 to 80% of that money will go into these limited number of swing states. Why? Because those are the ones that are a tight race. If you're Kamala Harris, why would you spend $1 billion in advertising in California? You would not. You're going to win anyways. So things have to be tight to raise money, and things have to be tight to spend the money. And if there were no tight states, if there were no swing states, why would anybody advertise? They're not going to. So do you think, let's recap for a second. The polls have media ties to all the major media networks. You can only raise money if the polls are tight. The money is spent on advertising on the same media networks, and they're spent in the swing states on those media networks where, again, things are going to be tight and everybody knows it. Do you think all this money would be spent on the media companies if the media companies their polls showed a blowout? Again, if Kamala Harris was losing by, say, 10 points from July, I'm not saying she was, but if she was, do you think she could raise the money, and do you think anybody would advertise on the media companies that orchestrate those polls? Or do you think NBC would show a poll that's a little more close, with Harris having some optimism, and that would generate revenue? Maybe a bit of a conspiracy theory. I don't know. What do you think? I think It's entirely predictable if you follow the money to understand something, which you should always do. I think it's entirely predictable that the polls in the early days are a scam. Entirely predictable. But if the race is a blowout, again, hypothetical, I'm not saying this is true, but let's say Kamala Harris is losing by 10 points, fairly consistency, but these forward-facing polls, the public-facing polls have things really tight with her as a lead. Well, you can't go, if you're New York Times, you can't go into the election being her ahead if she's going to lose by 10 points. Then you just lose all credibility for next time. So as you get closer to the election, we're 3 weeks out, by the way, you need to start sort of reversing. You've got all the money already anyways, so now you need to start reversing what you've pulled before. So last week she dropped 5 points in the polls last week for no reason. Nothing happened last week to change her fortunes. She dropped 5 points. It appears that the Democrats are panicking. She's going out on every media place that will have her at this point. It's not been going well for her, but she's just getting hammered. Now, they changed it 5 points, the polling. If she was down 10 points, let's just say hypothetically you're New York Times or CBS and you have your polls and you know she's down 10, but you've been promoting her as being up a little bit, would you do that correction all at once? Oh, we went from tied or her ahead by 2 down to -10. No, you wouldn't do that. You would kind of take a step there. So do you think we're done? Do you think we're done at a 5-point drop for Harris? Or do you think there's more to come in the remaining 3 weeks of this election? That's what Scott Adams is calling the Kamala correction. He's branded that with 2 Ks. Kamala correction made me laugh. Anyways, the interesting part of this is I never thought about the corruption of that system. Follow the money. What do you want to understand what is going on? Did you know that I am known? I'm known. People stop me for my association with martinis, ice cold martinis. I'm wearing a hat right now that says Martinis with Scott. If you can see that on the video version of this show, I do like my martinis. Well, the Wall Street Journal reports on the weekend that basically they tell you how to make a good martini. I don't know why that's in the Wall Street Journal, but I very much appreciated it. In this martini golden age we are currently wading through, the one that the pandemic's thirsty early months kicked off, all of the old debates of the last century have been reborn. We argue about gin versus vodka, stirring versus shaking, vermouth proportions, garnishes, right? So olives versus lemon or what have you, whether your olives should be, why do people have stuffed olives with blue cheese? It makes no sense to me at all. What sort of glassware a martini should be in. The most recent arguments, including dirty versus dry, are also included in this. But it says the one thing that is debated far too little, this is the important part, martini drinkers, listen up, yet it remains as critical as anything to the success of the martini, is the phantom ingredient, temperature. Yes, all cocktails must be cold to be good, but no cocktail depends so much on frigid conditions as the martini. A Hawksmoor at Hawksmoor, Hawksmoor. I have to get to this place. It sounds fantastic. It's in Manhattan. The coldness of the martini is gospel, and it's billed as the coldest martini in New York. I think with the martini, it is the most important thing, said one of their bartenders. I think a Manhattan and a Vesper need to be cold. There's no chance the patron will mistake the Hawksmoor's martini as anything other than a deep freeze. When they deliver it to your table, it's just smoking. It's smoking like a cold car warming up on a Canadian winter day. They get the martini to -13 degrees Celsius. That's 8.6 degrees Fahrenheit. And he says, and they do it in a special commercial freezer. And so he says we would never be able to get to that low temperature by stirring or shaking. And then interesting part, so the temperature is important, but the other important thing I thought was that they mix it because they're not using ice, so it doesn't get diluted. And apparently, I never thought about this, but it's 100% true from my own experience that the dilution mixture is important. So they dilute it with 20 to 25% water. That seems like a ton to me. But your gin martini, in their case, they're talking about gin as opposed to me drinking vodka, comes out to 20, 25% dilution with water. And then they refreeze it to minus 12. And then they talk about, there has to be it has to be delivered right away, otherwise it starts warming up. And you don't want to put an olive in the drink. You want to put the olives on the side, because if you put it in the drink, it starts warming up. They're very scientific about this, and I thought that was fun and interesting. Here's what I drink when I order a martini. I pick my vodka. Let's just say it's a Kettle One or a Tito's, or whatever. I'll have a Kettle One martini, straight up, olives, no vermouth at all, bruised. That's what I say. So what does that mean? I think the important parts here are no vermouth at all. Now, why don't I like vermouth? Well, many steakhouses fine dining steakhouses will prepare their martinis with no vermouth at all. I think just to be cool. So first of all, I've got used to it that way. But the other thing that people miss is that vermouth is a wine, and a lot of bars that are kind of factories or what have you, in terms of turnover, they're not taking care of their customers intimately. They open up their bottle of vermouth and they just kind of leave it behind the bar, as opposed to storing it like a wine should be stored. And because vermouth is a wine, it becomes bad. And if you have a terrible tasting martini, you probably have too much vermouth, and you may have bad vermouth. And what I learned is, if you just forget about the vermouth, you have a great martini. So basically, I'm just drinking a glass of vodka in a fancy glass. That's pretty, with an olive inside of it or on the side. And so, but what is the bruise part of that order? Well, the bruise part is you got to shake it or stir it extra hard to get ice chips in there to make it extra cold, because it is the cold that really matters. And the ice chips I didn't know this, but luckily provide that dilutive factor, that water that they put in. So if you want the secret to the best martini, I think that's it. That's why I've been out with people who don't even like vodka martinis. They drink my martini prepared that way, which is, again, just a glass of vodka, and they love it. And it's all to do with the temperature and the dilution. So there you go. Here's your reminder, your periodic reminder on Mornings with Scott, to not sleep on nuclear power. The next bubble coming for investment, for advisory work, for whatever, jobs. Reuters reports that Alphabet's Google said on Monday it signed the world's first corporate agreement to buy power from multiple small modular reactors. These are nuclear reactors, of course, to meet electricity demand for what? For artificial intelligence. We've talked about this before on the show. We don't have nearly enough power anywhere in the world, but particularly in North America, to deal with the energy demands of the data server farms required to power artificial intelligence. And so what you're seeing is these companies going out and investing in nuclear energy, which is the clean energy solution to getting the power that we need. The technology company's agreement with Kairos, Kairos Power, aims to bring the first small modular reactors online by 2030, with more reactors coming on in 2035. So these are smaller reactors that are module. Google says it has agreed to buy 500 megawatts of power from 6 to 7 reactors, which is smaller than the output of today's nuclear reactors. Again, they're smaller reactors. Google says we feel that nuclear can play an important role in helping to meet our demand cleanly in a way that's more around the clock. Technology firms have signed several recent agreements with nuclear power companies this year as artificial intelligence boosts power demand for the first time in decades. In March, Amazon.com purchased a nuclear power data center from Talon Energy. We talked about this on the show. Last month, Microsoft and Constellation, I talked about the Microsoft one as well, signed a power deal to help resurrect a unit on 3 Mile Island of all places. U.S. data center power use is expected to roughly triple from 2023 to 2030 to about 47 gigawatts. according to Goldman Sachs. So Goldman Sachs appears to be the blue chip analyst report on the data demands of AI. There will not be AI unless we have more power. And the more power is going to come from nuclear. There will be a huge demand in everything nuclear. If you're investing, if you're doing deals, if you're working and looking for a job and the next bubble space to be in, think about nuclear energy as the way to go. Speaking of Goldman Sachs third quarter profits surged 45%, announced this morning, I believe, from a year ago as a rise in deal making. Woohoo! And stock trading lifted the Wall Street Journal. Net income was $3 billion, up from roughly $2 billion in the third quarter. Investment banking fees were $1.8 billion, up 20% from a year ago as companies issued more debt and equity. Even the advisory fees were up slightly thanks to a revival in merger and acquisitions. Remember last week on the show, we covered a KPMG Canada private companies report and survey, and a huge, I don't remember the number, but a large percentage are looking at M&A deals in 2025. And what happens, as I explained, is you have chaos in the economy, you have inflation, you have labor inflation for consumers to deal with, labor to deal with. Labor needs raises to live, and so your labor costs go up, and you've got inflation on your inputs as well into manufacturing firms, and interest rates go way up, and now you're in trouble, and you got cash liquidity, and you start to you have uncertainty, so you can't go do a deal in uncertainty. And as the uncertainty dies down, as things start to chill out and interest rates start to come down, now you can think, what am I going to do with this mess that I'm in? Maybe an M&A deal, maybe a refinancing, maybe a restructuring, maybe that's the way to go. And that's the cycle that we just see over and over and over again. And that's where we are in the cycle, is we are going to start doing deals. And that's what we've already started. And that's what you see from Goldman Sachs. The results offer the latest sign that a 2-year-long deal-making drought appears to be ending as the Federal Reserve starts to lower interest rates. Exactly what I just said. Goldman's rivals are showing similar boosts to their Wall Street operations. Wells Fargo is up 37%. JP Morgan up. Bank of America is up. All based on investment banking feels. Deals are happening. We're back. We're back on the deal front. This show is for medium and small businesses. If you think you might need a deal as a solution, this is the time to start thinking about that. This whole industry on the public market sort of lead the way. Did you know that as a private investor, think about the venture capital space, you can't justify investing and taking equity in a new company, a startup, an entrepreneurial venture, unless there's a robust exit market. What does an exit market mean? It means 7-10 years from now, you can look and you can say, well, we could take this company public and we could do it at this valuation based on what I see in the public markets right now. Now you've got some math that you can start to work with, right, in terms of an exit. Well, if there is no exit because there are no deals being done, because there are no because the public markets aren't working and Goldman Sachs and JP Morgan aren't doing deals, then the whole private market just kind of dies down as well. And that impacts you in your medium and small business. So just draw that loop. Most people would look in the medium small business world, they look at Goldman Sachs, they go, what do I care? I mean, it's cool that they're making money. I understand there's deal flow happening, but that doesn't really impact me. Wrong. It starts at the top with the public markets, because the public markets are an indication of how someone could possibly exit their deal. When they're in the private markets, this will filter down. We're coming to, unless maybe if Kamala is elected, this is all going to go to shit because inflation will take off again. I don't know how that's going to work. I haven't thought about that much, but I think all things being equal, we're in for a robust year of deal making, and you ought to be thinking about that. Feel free to reach out to my company, Sinclair Range, if you want an assist anywhere in the world on doing a deal. What else do we need to talk about here? That's enough on Goldman Sachs. Hey, this is October 15th, 2024. Do you know what happens on October 15th, 2024? You're right. Module 2 of my course, the Pathway to Profit Academy drops today. We're doing one module a month. On September 15th, we dropped the first module, which was about how to implement continuous improvement, why that's critical for your business, managing with KPIs, getting boards of advisors to change perspective and fight through confirmation bias. Well, this module 2 is a little more hardcore mathematical. It's called Mastering Cash Flow, Build and Sustain Financial Health. It does drop today. And in this module, you will learn how to budget, manage, improve, and communicate or pitch your cash flow. Because when you are a medium or small business, you want to refinance, you want to do a deal like the Goldman Sachs people, you want to get some financing, you want to restructure, you want to do an M&A, you need to be able to pitch your cash flow. And when you pitch your cash flow, you need to be able to do it in a proper format that people want to read and that can understand. You will literally learn how to build a 13-week cash flow model in this module. I even do a shared screen and walk you through actual models to try to teach you how to do that. You will learn about the working capital cycle, because some cash out expenses are fixed costs, like often salaries, overhead salaries they don't change. You pay them, every other week or semi-monthly or whatever your pay rate is. Your rent would be somewhat fixed, right? Every month you pay your rent unless you're making changes to your rental occupancy mortgage situation. But you also learn about the working capital cycle, which is the revolving part, the dynamic part of your cash needs. And what you will find, I teach you in this on a whiteboard of all things, I teach you how to figure out the math of how much cash you have stuck in your business, in your working capital cycle, in your inventory, in your receivables, netted off by your payables. And if you look at all these things, what you will find, if you can improve that number, that's like a permanent equity injection into your business. And we go through the math of that so you can understand it. There's also a downloadable workbook, as always. And so that gives you the formulas and some definitions and some exercises and things that you can think about for your business, and included as a schedule are 25 tricky ways to improve your cash flow, just to get the juices flowing for making your cash flow better. Now here, come in. There's a discount code. There's a discount code that you can use right now. You can use it for the whole academy. You can use it for module by module if you want to do it that way, which will be more expensive. It is 50% off, and the discount code is Mornings with Scott. 3 words, Mornings with Scott. It's only available this week. 50% off. Get the course. Get the academy. It is the most important. You know what? This is a lecture. It's like each one so far, each module has been like an hour and 40-minute lecture. It's long and it's detailed, but the content, it's like going to university for practicality in running a medium and small business. And the content is second to none, I'm proud to say, of anywhere. I try to pay attention to these things. There's no bullshit in this. This is real stuff. Get the code. It's in the notes to this if you didn't hear me, but it's 3 words, Morning with Scott. It'll get you 50% off this week only. I'm going to leave you in my last 10 seconds here with an inspirational quote from Mike Tyson. Discipline is doing what you hate to do, but doing it like you love it. Discipline is doing what you hate to do, but doing it like you love it. That's what you have to do to be the best. I love that quote. See you tomorrow, everybody, 8:30 a.m. Mountains.